Morning, everyone. This is Brad Matheny. Today's the 27th of November, day before Thanksgiving. Hope everybody's ready. I certainly am. I want to let you know that I'm going to be taking a break tomorrow and Friday, likely not doing much of any video work. I mean, I may push something up to try to help everyone out on Friday, but we're moving into a very light trading schedule the next couple of days. And then, we have the whole weekend to prepare for next week. And it looks like the markets are really kind of pushing outward. So we're looking here at a 2 hour chart. Let me go back down to an hourly chart to kind of show you what's going on. This is the SPY. And last couple of days, I mean, we've rolled into this kind of topping pattern up into this area, and the last couple of days, we keep rolling into this upper, 600 level and rejecting. And as of right now, when I first got up this morning, we were down in 599 area. We're 600.17 right now. We're getting a little downward movement here overnight, really running into kind of a sideways flagging apex formation. You can see we're still in our channel upward. That's these levels here. I'll extend them out so you can see them. And I have to admit that by my own logic, closing up above this high on Friday, meaning this level back here, indicates that we are now in a moderate bullish trend. What would change that? So we are now, moderate bullish, which means that we should be preparing for the potential for an upward trend. What would change that would be a breakdown. Okay. If we were to break down like this, then we would be back into potentially confirming my excess phase peak pattern, this big rolling one coming down here to the low, forming this flagging formation and really trying to roll. So now we're not there yet. We don't have that roll yet, getting rid of extra lines in here. And because of that, I have to admit that we are now bullish. So again, intermediate, moderate, bullish. We've now moved to a new high. This is a Fibonacci price theory, new price high within the channel. And unless we reject back to the downside, we are going to continue to move higher, try to establish a new high, and then potentially roll downward. I still feel the anomaly event, based on my research, is capable of throwing a low at any point in time between now and roughly December 10th, 12th, 15th. So that's this red box anomaly area. It can throw a deep low at any time. I had expected the markets to move downward into this anomaly event prior to the Thanksgiving holiday season. We don't have that yet. It could come at any time after. Remember, we could be looking at that anomaly event anywhere out in this area, so really anywhere out in this area, potentially rolling downward. So be aware. What I think this really boils down to, at least in my interpretation, which again, I could be wrong, I'm not 100%, is that I believe traders through this election year are, if they haven't already, they are already out of the markets and they are likely looking for opportunities after the holiday season. And remember, we get done here with the Thanksgiving at the end of November, and then we only have about 2.5 weeks before Christmas, and then we have the end of the year. So if they got out or prepared with their investments prior to the elections in early November or shortly thereafter, we're still looking at very low liquidity and very low real market activity, I think. It's typically we get some sort of a Santa rally. We could be looking at a moderate Santa rally into the end of the year. But if you remember over here, my SPY chart for the anomaly event prompted a moderate upward move out into 600 by, January, maybe up into 610, 615 by January, February, March. So we're already up in this upper area, 600, and we've only been like 3.5 weeks since the election. So we're already up in this upper area, 600. I mean, granted, there's been a Trump kind of a boost here, but we still have that potential here for a move back down into 570, 571, 5, maybe 567 area. We still have that potential for a downside move. And that really puts us down here into this, I've drawn it down to this 580 level, but in reality, folks, we could see a much deeper downside move if a breakdown happens down into this 560 area I've highlighted, or down into these 570, 571, lower areas. So in reality, maybe down into this area. But what we're going to do right now is we're going to play what's in front of us. So right now, because of the holidays, because of the lack of liquidity, I mean, hedging to the downside is not a bad idea. It's really not a bad idea for a small portion of your capital, maybe 20, 30%. I wouldn't go too crazy. Um, Playing the upside move right now as a moderate upside move, getting the confirmation of a higher close, particularly if we get a higher close into the end of this week, which would include trading today. If we get no rejection today to the downside, and if we get a moderate high, meaning some kind of a move up here above this 600 level with a higher close, I would say that gives us pretty good confirmation that we may be starting a new upward trend. Now, 600 is also a big psychological level. I need you to be aware that 600 as a psychological level, we could reject up here over the next day or so. Remember, we get a holiday on Thursday, and I believe a half day trading on Friday. So pay attention to what I believe will be rejection up in this area. And that's kind of what I'm looking for right now. The psychological level really plays out into a, let me spread this out, really plays out as a potential. As you can see here, we've got this kind of double topping formation. And as long as we're trading right around 600 and we keep dancing around 600, we could very easily see rejection and a downward price trend resulting from this rejection at 600. So we're not out of the ballpark yet. Remember, I told everyone we'd be trading, or should be trading, about 80 to 85% of our capital in cash. So remember, back over here, I highlighted this, that we would be in 80 to 85% cash would be a smart move. I also highlighted that I would be looking to move back into 60 to 70% cash roughly invested back over here near December 10th, 11th, 12th. So remember, if you're playing smart, you should be moving into, or have already moved into, very small trading. You don't want to be overly aggressive right now. The anomaly event, if it happens, could be a good move to the downside. Hedging for that downward move would be a pretty smart idea right now, remembering that technically this new price high without any rejection is moderately bullish right now for the SPY. So we come over here to the QQQ, and let me show you here. I forgot to show you the SPY cycle pattern is a breakaway in carryover trend, meaning that we could see a continued upward trending. We are in bullish explosive trending with a bearish bias. I checked that yesterday, still bearish. We are looking at, again, a counter trend rally, which would theoretically be a downward move tomorrow, which we don't have any trading tomorrow. And then we have a trend rally, a carryover rally, a temporary bottom on Monday, a gap reversal pattern on Tuesday, the 3rd, and we have the top pattern, a flat down, Harami inside, and then we move into bearish exhaustion. And again, this is where I think we're looking for the bottom. So, could we see a big breakdown over the next 10 days, 15 days? Maybe, you know, bearish exhaustion is an indication that we had been moving down and we're reaching exhaustion. Flat down is a downward pattern. Uh, Inside breakaway Harami. We don't get any, temporary bottom here on the weekend. Temporary bottom means we identify support and then maybe break it. So I'm really not sold on the fact that we're in total rally mode. I think we're going to see some volatility before the end of the year. Okay, Qs are, and again, people are, I'll get rid of lines, make my chart look pretty for everybody. So we don't have the breakdown. We still have this channeling sideways mode. I'll draw the rotation again. We still have this cycling taking place in the market. Get rid of that and get rid of that. I'll redraw. And what we're looking at here is just flagging. It looks like I drew this flag almost perfectly. So we'll come over here. We've got this new price high, come back down into flagging. You can see that. I'll make this dark red so you can see it. It's either that one or that one. That looks closer. So here's our flagging. QQQs are off the highs right now. So we're going to need to see this price stay below this high level. We are looking at the potential of a moderate breakdown taking place at some point over here. If it happens, would be right around this flagging level, this 509 and change area, which is about where we're at right now. We're down 507 this morning. Slight breakdown. What we would be watching for, again, ladies and gentlemen, is that breakdown. Okay, coming into the anomaly event around December 10th or 11th. That would be a pretty solid move, expected move, in my opinion. You can see we have yet to break the new highs, which is why I think the SPY is actually setting up kind of a double top. So, and I'm also watching, I created this list specifically to watch these sectors for a downturn. We have yet to see any big breakdown in these. When we get a breakdown in the market, if we get this breakdown trending, breaking lower, we're going to see all of the sector spiders for the most part move downward. And we will be watching my crash index move downward. The crash index started to move downward the last couple of days. Nothing serious, but weakening in trend overall. And we're basically, I'm watching this to see if we get any type of activity to the downside on a daily and intraday basis. So we'll come over here real quick, go to Bitcoin. Bitcoin has found its base. We should be in the consolidation phase. Let me redraw this because we've had our peak, our flagging, our breakdown. We would now be struggling into the consolidation phase. And you may ask me, Brad, how do we address these continual new lows to the downside here? Let me explain it to you. So we get the breakdown, we set up a low. We are expecting consolidation, but we bounce, we set down a new low. This is essentially flagging. We've come down, we have rolled into this low, and we've set up a downward flag, just like we saw in the SPY that's going up. Now we've set this new low. What happens? We can reject off of this new low, come back up, set up a new flag, come back down, set a new low. Reject off of this low, come back up, flag potentially, and set a new low. That can happen. That is the basis of the concept of the excess phase peak pattern, which is essentially go away, which is essentially the ability to come up, pull back, flag, and it's either going to do one of two things. It's either going to break down or it's going to break up above the high and set a new high. That is the basis of the excess phase peak pattern. And this is the construct of the market. Essentially, this is Fibonacci price theory at work. We have a new high price here. We have a new low price here. We move into the flagging. Price must attempt to establish a new high, which is this move, or a new low at all times. That's Fibonacci price theory. It's got to move to a new high or a new low no matter what. If not, and it can't break this high or break this low, then it'll establish new high low ranges in here and eventually break these ranges. Eventually. That's the theory of Fibonacci price theory. And that Fibonacci price theory is what constructs the excess phase peak pattern. So, where we're at with this rolling pattern right now in Bitcoin is we've seen this continue to roll downward. I'm getting rid of this lines real quick. And where we have this move is we've continued to find lower lows. We've come down to this is our current lowest low. And now we would be looking for consolidation out in this area. Okay. Consolidation can stay within this range. So you can see how we've hit the peak. Here's our peak level way up here. Doing it again. There's our peak level. I'll make this a darker green. Here is the peak of the flag, which is right up here. And here is our low for current low for the consolidation pattern right here. And we would potentially be looking at a breakdown. So you can see how big this flagging breakdown was. And what I'm going to do is I am going to simply draw a line from the high to the low of the flag right now, and then duplicate that line and attempt to see where that puts us. And that puts us right down into the 82,500 range. So 82,500. Now, again, this is what's called a measured move. It's a 100% move. And essentially, price makes these 100% moves relatively consistently. Okay. Now, granted, they can be 138%, 150%. They can be 60%, but a 100% measured move is a fairly consistent measurement that I like to use in terms of gauging where things can go. Okay. So it is a measure of potential price targeting, where we could see price move in the next downward breakdown. So as we come into this sideways consolidation pattern, breaking down into consolidation, eventually we can come right down into this area and look for an ultimate low. And if we can't find a low there, then we will go lower to try to find the ultimate low. Now, understand that I do believe that this lower level here, I'll draw it as a box, is really where it's trying to move. I think Bitcoin is going to unwind pretty much all of this little rally phase from the Trump move, and it's going to come back into the 72 to 76,000 area right over in here before finding a base. That's my opinion. Okay, gold and silver. So let's take a look here. Big gap. More than likely a rollover in contracts. I haven't checked yet this morning, but I would assume this is a big rollover in contracts. We've seen a huge solid rally up to the upside here, likely because of a rollover in contracts. We are moving higher. We are still looking for that anomaly bottom setting up in gold, which is the really the roll of the low. So we've had, deep selling because of overseas markets trying to get cash. causing metals to fall last couple of weeks and days. We've now seen this solid pullback. We are moving into an accelerated upward trend here, I believe. You know that I believe gold is moving up to 3,000 before the end of the year. If you've been following my research, I think silver is going to move up here into the 32 to $35 area, which is going to be fantastic. I think we're going to get up here into this area before the end of the year. That's right up here. And I think gold's going to move up into this 3,000 area before the end of the year. That's right up in this area. I've drawn it already. And what we're looking at right now, folks, is gold is moving into this sideways kind of a channeling mode. So you can see where we're at here. We need to get above the 2715 area to accelerate back to the upside. So we're looking at forming one of those, peaks, pullbacks, and then a rally. We would need to see it rally up into this area. Same thing with gold or silver. Silver is outside of this channel. Let me come down here and come down here, make this a little broader. We're now up above that channel right here. We need to see this follow through and get back above this 3150 area right about here. So it's going to be interesting to see what gold and silver does over the next 4 or 5 days. We've got technically a breakout to the upside, and gold and silver cycle patterns are right now a uh, gap potential. Perfect. In a counter trend mode, we are bearish into accumulation, but a counter trend mode gap potential in a bearish trend would be to the upside. That's exactly what we have with a gap, which is beautiful. Love it when the cycle patterns call for a gap and it happens. I mean, how great is that when the cycle patterns were called literally months ago for a gap potential and we get a gap? So right now, folks, we're watching for metals to move higher. That's the bottom line. I think we're going to probably be up in the 2700, 2750, 2740 area by early next week on gold. And we'll probably be up in this 3160, 3180 area for silver. I believe that's the next big move after everything settles. Okay, guys, that's it for now. Remember, be safe, spend time with your family. We don't get these holidays but once a year. We're supposed to be very thankful for what we have. I'm thankful for all of you who follow me. I'm trying my best to lead you in understanding what is coming and what to expect in the markets. And remember, we are trying at the same time to learn to become better traders and to learn to profit from these market moves. So if you're following me, remember you should be very cautious right now, trading only, basically 15 to 20% of your capital. You should not be trading a lot right now. This is a very volatile time. Hedging to the downside right now is probably pretty smart and moving into the last week or two before we get into this end of the anomaly event. So if we don't see any breakdown happen over the next week or two, then the anomaly event was a dud. It didn't play out, and we'll see what happens. If it does break down and we see some kind of a low price move between now and say December 15th, then we're going to call it a successful anomaly, and we could be rejecting right at this 600 level for the SPY. Remember, watch the SPY and the QQQ. Really important to understand that the SPY is much stronger right now than the Qs, and so it's kind of interesting. We're getting it's kind of like brothers. My brother and I separated by a little over a year, but long and short of it, brothers love each other. Brothers will go to war for each other, but brothers will fight one another till the end if they're opinionated. So that's kind of like what's happening here with the QQQ and the SPY. It's a basically one is being stubborn while the other is being very easy to read, meaning the SPY is pretty stubborn and the QQQ is fairly easy to understand right now. Okay, guys, that's it. Talk to you later.